Nilesh Shah, MD of Kotak AMC, is now with us. Nilesh, thank you so much for taking out time for us. Just a couple of days back, you were here with us explaining our viewers what's happening with SVB, what can be the impact. Can you now tell us, with this incremental news coming in on Credit Suisse, what can be the impact of India? Have you done your numbers, and what do you think this essentially means for an Indian investor?
So one, when there is a global contagion, obviously there will be impact on all the markets around the world because of interconnectivity. But as an investor, the first thing which we have to remember is that what are the possibilities of SVB kind of situation in India? One, our interest rates haven't risen as much as US Fed had to raise. So to that extent, mark-to-market losses on our treasury portfolio will be limited. Number two, India has implemented Basel III norms for banking system. In US, it has been implemented on a piecemeal basis. Under Basel III norms, you have to maintain liquidity coverage ratio, which apparently wasn't maintained in SVB cases. So to that extent, we are better off. In SVB's case, as well as probably CSFB case, there was concentration of deposits from particular region or from particular kind of business. By and large, most of the banks have fair amount of diversification thanks to their branch network and thanks to Indian economy. And most importantly, in SVB's case, HTM investments became almost half of their balance sheet, a little under half of their balance sheet. In India's case, there is a cap on how much you can put into HTM. So we have sufficient rail guards to ensure that our banking system doesn't get derailed vis-a-vis what happened with SVB kind of scenario. Now, that doesn't mean that our markets will not face any impact. If US interest rate indeed goes higher and for longer, there will be correction in our market because that scenario is not properly priced in.
So, Nilesh, let's just put things together. Why are markets behaving the way they are, not only in India, but maybe globally as well? Are they panicking that things are not stabilizing? Every day you're getting some bad news. You think markets are just waiting for some certainty, as they always tend to do?
So, in the developed world concept, clearly markets panic is function of reset in interest rates. Not so long ago, interest rates were near zero, with more than $17 trillion of debt securities having zero or negative coupon. Their markets are getting adjusted to the fact that interest rates can remain higher and for longer period of time. In the European context, some of the uncertainty could be linked to Russia-Ukraine situation as well. Now, in the Indian context, we were trading at around our average historical valuations. But relative to other markets, we were trading at a significant premium. As I have often called, this was three-idiot kind of move for India, where in that famous movie, Amir Khan, Sarman Joshi and Madhavan stands in one line. And when their professor asks them to step up, Sarman Joshi stands where he was, but Amir Khan and Madhavan takes a step back, and hence Sarman Joshi looks ahead. Same thing happened with Indian equity market. We were in equilibrium with rest of the world, but rest of the world fell down in valuation, and hence our market looks more expensive relative to them. So some correction in our market is making adjustment for that valuation gap. We became hugely expensive relative to rest of the world. Now with some price and time correction, we are narrowing the gap.
I wanted to ask you a question, because every time earlier you had given us examples, it's always been about cricket. It's been like a fourth wicket down, and now the partnership will happen. It came in as a bouncer to our market, but we will adjust as our wicket has not gone. So all these examples I remember. So suddenly, how come a movie example came in?
Two things sell in India: cricket and Bollywood. As a fund manager, I started my career as a debt fund manager, and people used me as a, instead of sleeping pill, they will listen to my talk and go to sleep instantly. So to keep my viewers awake, I started using cricket and Bollywood, and thereafter they don't go to sleep.
Just also wanted to understand that, last 2, 3 years, Nilesh has been all about taking risk. High growth companies, companies where there is a story, companies where there is a future visibility of cash flow. You think with such sort of turmoil coming in, you would now start to, see that this stock has suddenly fallen so much. They have so much visibility of cash flow. They have so much cash on their books. They don't have a lot of capex. You think that that style of investment would change after these last 1 month of global events?
So the style of investment is unlikely to change for fund manager. A value investor cannot transform himself or herself into growth investor. A growth at reasonable price investor will not be able to transform into value or growth at any price investor. But yes, the reward of the market can swing. They were earlier rewarding FANG kind of growth at any price stock. Thereafter, they started rewarding value stocks. And now maybe we are reaching a phase where growth at reasonable price style will get rewarded. Markets are always cyclical in nature. They try to bring equilibrium between value, growth, and GARP at various point of time.
Right, Nilesh, thank you so much for taking out time for us. Thank you so much for agreeing on a very, very short notice. We told you this morning, and thank you so much for taking out time for us. Well, on that note, we're taking a break. 45 points down for the Nifty as we take this break, 16,925.